Okay, so what do Jamie Dimon, Warren Buffett, the President of the United States, and 200 other business leaders and CEOs have in common? Short answer, they all agree for public companies like Tesla that they should eliminate or reduce the practice of estimating quarterly earnings. Day traders and short-term investors, probably analysts, are going to hate that, but what would eliminating them mean for the long-term investor? Well, Fortune magazine calls our next guest, quote, probably the foremost private equity scholar in the galaxy. He also co-founded the entrepreneurship program at Chicago's Booth School, and he helped launch a competition which has spawned over 100 companies that have raised over $600 million and created over $9 billion in value, and they include Grubhub, Braintree, and Venmo. You've heard of those. We welcome Chicago Booth finance professor Steven Kaplan in a Fox Business exclusive. Steven, it's great to have you here.
Great to be here.
Big debate about whether or not companies should or should not report every quarter. What do you say?
So there are two questions that are different. The one question is whether the U.S. economy is too short-term oriented. And then there's this question about should you report every quarter or every 6 months. And the first thing that's just a complete puzzle to me is why people think the U.S. economy is short-term oriented, and that's a problem. People have been saying this for 30 or 40 years. There was a very famous article in 1992 by Michael Porter saying U.S. companies were too short-term oriented. And, you know, there's this 30, 40-year history. You know, today is the long term. And so if they had been right, if the U.S. economy had been too short-term oriented and that was a problem, today, U.S. companies should be in terrible shape. And, you know, as you just heard, we're hitting all-time records on the stock market. U.S. corporate profits to GDP are at historic highs. And so it's very hard to understand this short-term story because U.S. companies, frankly, have just been crushing it.
Well, they have been, but they don't always do that. And I've got to bring up Tesla to counteract what you're saying, because this is a company that has missed several production goals. You know, the CEO is, frankly, let's be honest, there's been some erratic behavior from him that we've seen on Twitter. We're going to go private. I've got the funding. Oh, no, never mind. I mean, these kinds of events remind us as investors that this is a leadership that may or may not be the best place to put our money, our dollars that are hard earned from us. Can't you agree with that point? And we need to know what they're doing.
Again, I'm not going to agree with that. Now, so on the Tesla case, what's also really interesting is that the valuation of Tesla is phenomenal. Tesla, since it went public, has actually been a terrific investment for shareholders. The stock has gone up quite a bit, and it trades at multiples of revenue that are like 5 times what Ford and GM trade at. And the company has been losing money for forever, and still the market puts a value on it. So that strikes me as very long-term oriented, not very short-term oriented.
Well, okay, so long-term versus short-term. I'll ask you one more question on Tesla. Do you think that he made the right business decision by not taking the company private?
Absolutely, because he's a business where he needs money, he's losing money, or he's cash flow negative. And when you're cash flow negative and the market believes that you have a really viable product, it is great to be public. Amazon benefited from that for many years. The biotech companies are like that. And Tesla, if it had gone private, would have had to worry about will the private equity money, which he would have had to have relied on, or from large pension funds or sovereign wealth funds, whether that would continue. He's got to worry about that as a public company as well. But there's a good track record of the public market supporting companies as long as, and I think it goes back to what you said earlier, as long as they are delivering value in the future. Okay. And that's the real question with Tesla. Will he get the Model S built, and will he deliver value? So
with regards to quarterly reports, you disagree with Warren Buffett and Jamie Dimon. So to be clear, a lot of people do.
The quarterly report, that's a tougher one. So I don't see there being a problem. So this is the thing. So one response is to say leave it alone. The other question is really like, think of quarterly reports as like exams. Students hate exams. because it makes them study and makes them work hard, but professors still give the exams. So the real question is, do you give an exam every quarter, or do you give an exam every 6 months? And that's a question of, what are the costs of doing this, every quarter, going through the audit, going through the pain of doing that, versus the fact that it is giving you an incentive to work hard, it is providing information. I think, one solution which people have mentioned is you do the full audited financials every 6 months.
Yeah.
But on the off quarters, you give something interim.
My exams are every week, but I digress. Professor Steven Kaplan.
Your exams are every day.
Oh, man. Thank you, sir. It was great to have you on the show. Those were the memories, right?
Great.